2004, after we'd done several institutional grade multifamily properties, we discovered how we can get really good returns off of those. They were doing incredibly well. The cash flow was incredible. The investors were just loving it. And it was so much easier. As a sponsor, that's when we decided we weren't going to do any of those classy properties anymore.
Okay, so I'm a new guy. I'm starting out, and I need to put up, say, $250,000 on the down payment or the earnest money deposit for the PSA, and I don't have that kind of money. I mean, how do they get that money? Can they go to a newer sponsor might have the capacity to run it? You and I both know those Class A properties or B plus properties that we're buying, they're easier to run because you can get really great management, and because they're newer constructed, there's not a lot of maintenance to them, so they're easier to run. But how do I get involved in that? I mean, can I still go out under a Reg C, 506C, and do a pre-subscription round with friends and family to raise that earnest?
You would look at 2 or 3 properties and you would find one that worked right away. But because the competition became bigger and bigger as time went on, I mean, when we started, there wasn't that many players, in 2002. By 2015 or so, there was just too many players in the market. So you'd end up having to look at, 20 or 30 deals before you found one that you would want to do. And so I had to make the model more efficient. And so what I did is Red IQ at that point came out in business, and then they had a way to take, this is before AI, but they had a way to take pretty much anybody's rent roll, read it, and convert it into data that had a standardized layout. I could then, within a few minutes, input that into the Red IQ thing, have it come back with the worksheet, and I copy and paste the rent roll with that standardized layout into my model. And within minutes, you've got almost all your analysis done based on what you saw in the rent roll. The rent roll and their financials, monthly financials. So our underwriters could canvas a whole bunch of deals real quickly within a day.
You used to also do a spreadsheet that had sensitivity analysis, which is a form of Monte Carlo simulation. A lot of guys just do not do that.
In terms of content in the package, though, there's still some stuff that I see a number of sponsors do that doesn't work very well. A number of property packages they put together that have a real elegant look to it, but there's often not much substance to it. There's not a lot of detail, and when there's not a lot of detail, there's usually a lot of questions investors have about there's trust issues. And so just kind of like what I said when it comes to revealing the good and the bad, I like to reveal everything, and so I provide disclosures on everything on the deal and all the detail, but I summarize all of that up front so that those that want to quickly get through the thing and see whether or not they're interested have all the teasers and everything up front, and then the detail follows after that. And I refer to the detail in my summaries at the beginning, to look at such and such page, so it makes it easy for them to get around and see what they need to see.
Yeah, your package